Good morning and welcome back to Almus Market Mornings. From escalators not working to teleprompters going off mid-speech, President Trump was not a happy man during his United Nations General Assembly speech. It garnered some attention because during the press time later, he suggested that NATO countries should shoot down Russian planes if they enter their airspace. On the other hand, globally markets were also focused on Chair Powell's speech. The tone was broadly in line with his post-FOMC presser. Morning, JK. Globally, markets have been largely quiet despite these big speeches. Interestingly, in India, we are seeing significant pressure on the rupee with fresh lows being made. What do you make out of this move?
Good morning, Swaraj. So again, not a day with much of economic calendar, but there was focus on two leaders speaking, one a political leader and the other one head of uh, most influential central bank in the world. Yeah, Trump's speech was obviously very much, in support of Ukraine's efforts, and so they, as you said, uh, a bold call for NATO countries to shoot down Russian planes if enter their airspace. And he also mentioned that with Ukraine, with the support of European nations, is in a position to fight and win all of its territory back. Uh, I think for a world that has been looking forward to peace or at least a ceasefire, these statements were not really helping. But you never know what is the reaction of Russia going to be for this. But that is what we will be going forward, looking forward to. Uh, of course, we also had Powell speech yesterday. This has come after a little under a week after the FOMC statements. Now, as you said, most of his statements were in line with what he stated post FOMC, and he actually said that there is no risk-free path in navigating between inflation and employment goals, and the recent tariff increases may have caused one-time increase in prices. Does not expect them to ignite a persistent inflation episode. That is a slight, dovish departure, I would say, in his statement. But what market observers looking at was his comment about the equity markets. He said equity prices are fairly highly valued. So this is reminiscent of the irrational exuberance statement made by Alan Greenspan when he was the chairman of Fed in 1996. And the reference to stock market bubble by Alan Greenspan did not really, evoke immediate response, but market did take note of it. And in a few years, we saw a big slide in the stock market, particularly the tech bubble was burst after that. This definitely something that market will take note of a view from head of U.S. central bank. And market has been observing many comments from leading experts about how it has been overvalued by various historical parameters. Market, yes, had taken a pause. I wouldn't say that it's reversing, because that's the way it has been behaving. Takes a pause for a session or two and then makes a new high. I wouldn't be surprised that happens once again. Apart from Powell, we also had a couple of more Fed speakers yesterday. Goolsbee, kind of hawk. He was saying that Fed needs to be careful about getting aggressive on rate cuts, but Fed did have some room to cut rates. Uh, on the other side, Bowman, who is a known Dow, said that the Fed must fend off job market risks and worries that Fed may be behind the curve on labor market weakness. On the economic data side, there was minor data, of course, on the PMI. We had Indian PMI, which actually gave a picture of a slowdown in manufacturing and services, though both have remained well in expansion territory. Europe services sector was stronger, but manufacturing was marginally contracted. UK painted a weaker picture in both areas, while US activity level slightly dipped in both as well. The PMI numbers are not frontline data for the markets, but they are still a forward-looking number. And we look more at direction than the month-on-month change in the index. So any large deviation in either side will only trigger market reaction or policymakers' attention. Yesterday's number were, not so exciting for the markets as well. Uh, yes, markets did pause yesterday in the stock. Dollar also maintained its steadier range. Only euro moving between 1790 and 1820, and all other currencies were steadier. Uh, Now, on the euro side, we also had a remark by one of the European Central Bank Governing Council member, Mr. Nagel. He tried to ease concern that euro's recent appreciation could be harming European exports, and he was saying that euro's gains against the dollar exaggerates the extent to which the export economy is being burdened. Because he is concerned about the overall valuation, not against the dollar alone. While dollar has climbed 14% against the greenback, it is not gained so much against the other currencies. That is what he was indirectly hinting. So this is relevant because even in ECB press conference, Lagarde had made a mention about euro's exchange rate being one of the factors in their radar. So not much reaction from euro, but it's significant that the central bank is not concerned about the strength of the euro as of now. The other market to catch attention yesterday was obviously the gold, which made another new high, almost closer to 3,800, rallying almost nearly 1.5%. After the Asian market open. In rupee terms, it touched almost 1,14,000, along with the rupee weakness. So coming to rupee weakness itself, we did have, after the weekend announcement on H-1B visa rules being amended, against the interest of India, the market reaction on Monday in rupee was somewhat muted. But yesterday, it was seen taking off, uh, breaking the strong resistances at 83.30 and 83.45, which was holding well. And the two factors contributed. One is that, when the dollar rupee, whenever it had a correction recently, we have seen the nationalized banks themselves are buying, which indirectly took taken as a cue by the market that rupee's weakness is in alignment with the RBI's thinking. And secondly, yesterday also they did not intervene much, so it made the way clear for rupee to fall. And there was, of course, some outflows that have been happening of late, and we are not seeing too much of inflows from FIs, despite stock market making some sort of a recovery. And exporters have been holding off any major hedging, despite the overall forward rate getting quite attractive to them. So very swift fall to 88.80 yesterday, and almost closed at that level. Think it technically it looks like 89 is going to be seen quite early in this run. 89.20 is good Fibo resistance. Again, these resistances are only levels to pause, and that doesn't mean that the trend will change at those levels. So we might see a retracement from those levels back to low 88s, but I think the trend does remain unless we have any major shift in the US India trade initiatives. So without that, I think market is not going to ignore all other aspects. Thank you.
Thank you, JK. And exciting day in terms of speeches, but not much on the economic data front. As JK mentioned, President Trump's speech was more in support of Ukraine's efforts. Chair Powell's speech mostly in line with with his FOMC speech. Fed is also in a precarious situation since labor market is weakening and inflation is elevated. There were a couple of other Fed speakers yesterday giving the entire spectrum of views. Goolsbee, a known hawk, cautioned against aggressive rate cuts, while Governor Bowman was supportive of rate cuts and, in fact, highlighted that the Fed may be even behind the curve to support the job market. PMIs were released by India, US, Europe, and UK. Not very exciting for the markets broadly, just here and there within the range. ECB's governing council member made some comments on the euro's appreciation. They say they are not that significantly concerned on that appreciation, and they're looking at the broader relative performance compared to other countries. Gold rallied 1.5%. Rupee terms, it touched 1,14,000. And yesterday, of course, we discussed about the dollar rupees rise, given the updates on the H1B visa, breaking the known resistance at 88.4550 quickly and moving to 88.80. As JK mentioned, 89 not very far away, and 89.20 comes as the Fibonacci resistance. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.